Well, let's talk about a story that we've been tracking here on CNBC TV18 very closely, and that is the measures that the government is likely to announce to try and stimulate the economy. Now, one way to stimulate the economy is to try and strengthen bank balance sheets. But is pumping capital into the public sector banks really the best option? That is the discussion that we are going to take up on our editors' roundtable today. Since yesterday, the finance minister has promised, and I quote, necessary measures to take the economy back onto a high growth path. But it's no secret that the centre has limited fiscal room. It's also no secret that state-run banks are in desperate need of capital. So this begs the question, is it better to inject money into banks, thereby giving them the elbow room to increase lending and thus spark a revival in investment? When CNBC TV18's Lata Venkatesh spoke with the finance minister earlier today, he said that all options for a better economic environment are on the table. However, he did hint at a bank recap, saying that weak PSU bank balance sheets are not the best thing to have and the economy needs to be supported. First, listen in to the finance minister.
I've had a series of meetings with different departments of the government, ministers, secretaries, and other economists within the government itself. This process of consultation is on, and obviously this government has been proactive from day one, and some recent data itself raises certain concerns, and these are concerns really to do with a push-up to the investment, and a lot of it also has to do with the capacity of the banks, particularly the PSBs. And therefore, we are in a process of discussion, and very shortly, whatever is required to be done in order to improve that environment in terms of policy, we'll certainly react to it.
You specifically say banks, so should we expect that you are thinking on lines of further...
anything?
No. You said banks, that's why. Is it recapitalizing them a little more?
You see, it's an obvious analysis that anybody dealing with the situation would make. Now, what steps we take, please wait for our decision in this matter.
Some timeline?
As I said, we are a proactive government, and therefore we'll certainly be reacting.
Some rural spending, sir. I mean, considering
please wait for some time.
Wait. That's the finance minister. Remember, he has said that the Prime Minister will sign off on the measures, but it's very, very clear that some measures will be announced shortly. But let's go across to Lata now and bring her into the conversation. Lata, capitalizing public sector banks, perhaps a safer route to stimulate the economy or not? What would you think? And you've been speaking with a whole bunch of experts at the JP Morgan India Summit as well. What are they telling you on the possibility of whether this will, in fact, make things better?
It looks like a consensus has emerged on recapitalizing PSU banks, and not with just 20,000 crores. The FM all but said it when we ambushed him earlier today. Later, finance ministry sources also said that hectic plans are underway, though it isn't as if it can happen in a few weeks. It will take time to plan. The original buy-in for this came from the Reserve Bank. The intellectual argument came from the Reserve Bank Deputy Governor Virlacharya, who pointed out that Japanese banks in the 90s, US banks in the late 80s, and even European banks after the sovereign credit crisis, post-Lehman, became zombie banks. They didn't lend because they didn't have enough capital. So the lesson is that if India has to grow, banks have to be adequately capitalized. Now, what is this recap bond? What creature is this? What the government does is that they don't have 90,000 crores to give the PSU banks. So what they do is they just give them a recap bond. That is not a GSEC. It's not a Government of India bond. It's a recap bond. So it doesn't become part of the fiscal deficit. Banks buy that bond, and that money which the government makes, it puts back into the public sector banks as capital. Now the point is, will rating agencies, IMF and all the big guardians of banking health accept this? Will they say, no, this is fiscal deficit? Of course they will. There will be a lot of grumbling from rating agencies, but the finance minister can actually argue his way that he has also tried a fundamental restructuring of banks. The IBC, the bankruptcy code, is one very good example. The other thing which he will probably wave to them is that he's also looking at privatizing. It's quite possible that that argument, that you're fundamentally restructuring, and that is why we're using this below-the-line recapitalization. Of course, the old argument of using RBI's reserves to capitalize could also be employed at this juncture.
All right, whether it will be the bank recap bonds is something that the government is mulling along with the Reserve Bank of India, as Lata was pointing out. But it's very, very clear that what is going to come to banks perhaps is going to be more than what was budgeted. Also, banks are being asked to look at possibilities of perhaps bringing down government shareholding as well. And that's an option that the government is looking at this point in time. Now, as consensus emerges on the best route for recapitalization of PSU banks, it's also important to look at the quantum of capital that these banks will need. Prashant joins us now with some key numbers. Prashant, what kind of gaps need to be filled to offer these banks the support that they require?
It looks daunting, Shireen, to say the least. I mean, the one big number that I think we need to focus on is about 1.24 lakh crores. You know, to estimate the total capital shortfall, which may arise a year from now, that is in financial year 19, and the estimates that you're seeing on your screen is from a brokerage house, Antique Broking, worked out these numbers. And, you know, there are lots of moving parts. You have to assume what kind of asset growth will one see, what kind of growth in risk-weighted assets will one see, what kind of improvement, if any, in return on assets will we see. Will we see further impairment along the way? And of course, then there is the stop of Basel III requirement, where by F519, capital adequacy needs to be 9.5%. You put all those things together and you get this big number. If you can have the graphics up back again, you get this big number of about 1.24 odd lakh crores. I've just put the big sort of banks and the big numbers on your screen. I've not put the entire PSU bank shortfall. But this basically is the bulk of what the problem is. Take the first three banks on your screen, IDBI Bank, State Bank of India and Punjab National Bank. Those three, and SBI, by the way, I've not taken standalone, but the consolidated sort of subsidiaries included, you essentially are looking at SBI, PNB and IDBI accounting for about 60% of the capital shortfall, which is about 1.24 odd lakh crores. There are a couple of banks which do not require capital, according to Antique's calculations and assumptions. But I think, you know, 1.24 lakh crores, as you were saying, the government may have to spend more for PSU bank recap on what they had budgeted in the, what they had penciled in the budget, the union budget. But I think it still is a much larger number going at the current rate, unless, of course, there is a dramatic improvement in the underlying economy, lending picks up, and then the assumptions become, you know, a lot better. But as of now, according to Antique, the big number is 1.24 lakh crores is the capital shortfall, which needs to be made good by F519. Back to you.
Well, it's a large gap between what the government has budgeted and what the ask is, Prashant, as you clearly pointed out at this point in time. But, you know, bank recap is just one of the options that the government is mulling. What we are given to understand is that at this point in time, in North Block, an assessment is being done of the kind of fiscal headroom the government will try and create. Remember, the N.K. Singh-headed FRBM committee had given the government an escape clause on the back of structural issues. The government could escape from the glide path as far as fiscal consolidation is concerned. Those recommendations have yet to be adopted officially through Parliament, etc. But the question is whether the fiscal headroom that the government now seeks to be able to provide the stimulus is going to mean breaching the current fiscal deficit target. That is under consideration. It's under active consideration. And it's absolutely clear that the government believes it needs to spend to try and get growth back on track. We will keep this discussion going here on CNBC TV18. Don't go anywhere. But do stay tuned. The news continues.